Good afternoon, everyone. BC Richfield here, coming to you live from London. It has just gone past 1 p.m. here, making it midday UTC. A big shout out to everybody that's joining the streams this week live, and for everyone obviously watching it on catch up. I hope, a little bit like me, kind of starting to adapt to daylight savings now. It still kind of makes a fool for me for a little while. So I know here in the UK we feel even worse because it's only like an hour, right? UTC we spend half the year exactly on point, and then we spend half the year 1 hour back. But it seems to really throw everything off. Celtic Dragon, hey bud, how you doing? And to everybody else that's on the stream today, we'll just give people a couple of minutes to come in. Maybe like me, they're struggling a little bit more with with daylight savings than we all want to admit. Sebster, a fellow Brit. So I see you're on the ball today, mate, which is awesome. So brilliant. Look, let's not keep you guys waiting around too long anyway. Everyone will kind of filter in as and when they're ready. So I hope everyone had an awesome weekend. The sun's been out here in the UK, which just makes a massive difference. We had a lovely day yesterday. But it's for typical kind of British antics. We live literally just outside of London along a nice little kind of fishing village. So we go to the beach quite a lot. We take the dog down to the beach. And yesterday the sun was out, but it was still only 9 degrees Celsius, right? So we did the very typical British thing, a lot with other Brits, which was out with the dog on the beach, ice cream, coats on the sand, sitting there in T-shirts, kind of kidding ourselves, really. It was a bit warmer than it really was. T-Rock, hey buddy. Sunny Peak District for you, Seb. Beautiful part of the world. Used to do a lot of walking in the lakes. Ron, good morning. And Celtic Dray, how did I know? Sunny in Wales too. Shame to be indoors. You're right. My granddad, a very proud Welshman from Aberystwyth. So spent a lot of time there when I was younger. Another stunning part of the country. So before I digress and bore you all with my life history, let's just dive straight into the charts. First thing I want to take a look at, actually, leave the annotations on there, but also let's just see where we are on a weekly scale. Guys, obviously, let me know if there's any issues at any point with the sound or the visuals, yeah, and we'll take a look at that. But for now, morning, Nemesis. And Craig, how are you doing, my friend? Yeah, I bet Brighton was absolutely pumping yesterday. Beautiful part of the country if you've not been there. Brighton Pier, just awesome. Stunning people as well, very diverse kind of culture down there, so it's always up for a good time. Now, looking at the weekly, a couple of things I got marked out here. This red line's our resting liquidity. All right, thanks, C-Rock. So on a weekly scale, this is the swing high that we're targeting if price is really going to kind of push up from here. This black line, it was just to save obviously the kind of invasive nature of this, right? So that's our fair value gap on a weekly. We've come and filled this one, yeah, and now we've filled this one as well, or very close to filling it. The reason that I just added that is FVGW, so fair value gap weekly, and the FF just stands for full fill. It's so that we can take that off of the chart, so that when we dive onto the lower time frames, our chart isn't basically eclipsed with grey. Lovely sentiments there, Craig. Yeah, wishing everybody a really profitable week ahead. Now, what's kind of significance to me here is we've had this big move up, right? Look at this candle, like biggest bullish weekly candle we've had, bigger than that one. I won't go into it too much, but for a long time, right? I think we're probably talking about that being the biggest bullish candle since the kind of the last kind of major run up. So that's definitely significant. What else is significant is that it's very normal for price to consolidate after a good run. Yeah. So as we can see here, we had this run up, consolidation, another run up here. All right. And exactly the same as we've had as we've kind of dropped down. Big sell off here, a very small consolidation here. But, and it was SC that introduced me to this phrase, which I think is incredibly true, which is small bodied candles lead to big body candles, right? Small, big. Yeah, look at this collection of small candles here, big candle here. And we had a similar situation in here. That's because price compresses. It's then looking whether it's, got the buyers on side, the momentum, etc., to push higher, or whether it needs to correct a bit lower. So thinking on a weekly scale is this is kind of the third week of consolidation here. And when we're looking at the bodies of the candles, we're looking at the volume in here. The wicks for me represent where prices tried to get to but failed. So the trading volume is within the bodies. And we can see really when we look at the close here from the week beginning 13th of March, we're pretty much almost exactly where we were back then, right? Yes, we've had big price moves, we've had some lovely day trades, etc. But in terms of the ultimate high time frame, that's where we are. So as we break that down a little bit further, let me show you what this big grey lump is all about here. Let me just make this a little bit lighter. It needs to be a bit heavier to stand out on the Bitcoin report charts. But this big box here is our weekly fair value gap that we had labelled up. The reason this is significant is often after we have a run up, price looks to come back down, rebalance these imbalances, or inefficiencies, the fair value gaps, basically the gaps in this price movement. So when price started to consolidate here, I was actually expecting a little bit of a deeper retrace into here before then looking for continuation higher. In fact, what happened was we came down and just barely touched this and then we took off. So we've got this big area down here, right? Let me just hide this for a minute just so it's not so invasive. We've got the fair value gap here on the daily and here, which will provide a draw on price to come down to balance. Price could then kind of consolidate here briefly before looking to make a leg higher. We've obviously got a bit of news-driven narrative at the moment in terms of the dollar just getting absolutely pounded. You've got this kind of coalition that's looking to be formed between sort of China, the oil-rich nations, Russia to be amongst those, and others, whereby they're looking to abandon the petrodollar, right? So that will have big, big impacts on the US. And obviously the US is, again, printing vast sums of money to deal with sort of the banking crisis and that over there. So as we know, quantitative easing, which is the printing of cash, devalues a currency. And at the moment, the dollar's very weak. So the correlation between that and Bitcoin is definitely there, but it has been a little bit of a shakier one recently, as has the reaction to traditional markets, right? So normally when we're watching the dollar dump, you're watching risk assets or indices, equities, things like your S&P 500, your NASDAQ, have the opposite reaction. Dollars going down, they're normally going up. And there's also the correlation that we've got between Bitcoin and risk assets like that, which have been, obviously wavering a bit, and people now really looking towards that kind of the idea of decoupling. Personally, I think it's a little bit more the situation that and Julian, excellent fundamental analyst who I'm lucky to work alongside, is always really kind of putting this point home as well, which is that it's much more the dollar is the dollar tanking really, much more than it is that kind of correlation of saying it's the strength of risk assets that's pushing the dollar down. It's actually just the weakness in the dollar that's kind of setting that tone. So we do want to be wary of that. However, we want to trade what's in front of us on the charts, right? So let me clear these up as well, because we can see clearly that we've got this draw on price down here, but it doesn't mean it has to be right now. When we leave these imbalances, these inefficiencies, fair value gaps, then they don't need to be rebalanced straight away. What they do is, as they're coming down, you can find support here. It can move away. It could rebalance this a lot later. McRaw, hey buddy. And thank you. So where are we at the minute? We're in this range, So let's really kind of put our focus on here. We can see we're a little smidge away from this fair value gap full fill on the weekly. Not really a problem. Again, I'm not measuring those so much in terms of whether they get perfectly filled or not. I'm looking at them more as areas that price is getting drawn into before we see a reaction. So let's thicken these lines up a bit and look at where we are, and also look at what I bang on about all the time about range trading, right? That our principles are this: if we've got a range, then what we're looking for is when price runs liquidity, so when it deviates the range as we got here, and let's do that in green so we can see that nice and clear. So we've had our deviation of the range here. Price has come back within our range, and then, like we say, we then target the far side of the range via the midline. So let's draw this one in as well. We'll make that red. So there's our deviation of the high. Price comes back within. We then target the lows, but always via the EQ, which is the midline of the range. That's just 50% from top to bottom. So how does that help us? Well, quite simply, when we have this range set, and how I've got this range is off of our daily mother bar, high to low. Yeah, makes our mother bar candle when this candle closes within this high and low, making these two candles our inside bar pattern. Okay, so that's the first candle has to be the larger of the two candles. The second candle has to be closed within its range. Yeah, so you can see here this has acted as our range, and like with any range, we take the midline of that. I focus heavily on the mother bar, but you also trade the inside bar. So let me just show you that very quickly because the principles, again, remain the same here. Okay, inside bar, price runs the low, midline would be around about here, which we would track into here, rejects again, comes back in, back to the midline, closes above the midline, runs the range high, comes back within, interacts with the range low, runs the range high again, back to the mid. So see how it's this constant cycle until we break out. Yeah. And then when we break out, we're then looking for price to hold that level. We look to the lower time frames for market structure shifts, and then we trade that higher. So through all of that rambling, where does that leave us? On a daily scale, we also want to mark up our key liquidity. So for me, I'm looking at prior days high or prior days high, meaning 2 days previous. So I'm looking at the liquidity here as well, which is back from Friday. Yeah, so that was Friday's low. And then in terms of liquidity above us, well, we've taken this liquidity here from Sunday. I don't pay tons and tons of attention to the weekends because I like to focus a bit more on when traditional markets are open. That doesn't mean that you can't get really good trades at the weekend. I know some people really successful trading crypto at the weekend. Obviously, you can't trade traditional markets because they're closed. But for me and the way that I've kind of learned and grown as a trader, I focus a lot on traditional market information as well. But what we see is what we have. We run the range low, come to the range high. We've run the range high. Now we've come to the midline. So are we going to see strength here and price push up? If we start to break down, then our natural target becomes the range low, followed by the low of the resting liquidity below here. All right. So let's move to a 4-hour. Eron, yeah, exactly. Wash, rinse, and repeat within the range. Yeah. So it's a really good point. We trade the range until we break the range. Yeah. We want to be careful of the deviations. I'll show you how we're kind of looking for those and what we can look at for confluence. But the idea of the range is that when price is ranging within here, we play the range until we're wrong. We get that confirmed breakout. And when I say a confirmed breakout, I mean something like this. So in the Bitcoin report last night, which I put out through the Nest, this is why this is on here. We've got this fair value gap. We'll look at that a little bit closer here on the 4-hour. This should have acted as support for price. We failed to hold that. We then dropped below it. When we've done that, we're either looking for price to find resistance in this area. Yeah. But my thinking was that this midline's probably the most important thing here for us, because let's see how price has played out. Yeah. So we ran the range low, took the midline. Yeah. Ran the range high, back down to the midline held. We've then come back up, but we've not run the highs again. Price has come back down and is now once again finding support at the mid. So if we were to hold this support here, okay, break out, yeah, like we did back here, see we set this wick, I then want to see price retesting this range higher and ideally doing something like this, right? So let me get rid of this fair value gap full fill line so that doesn't give us any confusion. So when price did this previously and we set this higher, yeah, price came out. Notice how price failed to retest and just came back within the range. What we'd be looking to do is for this area to act more as support, right? So that when price came back in here, we can look on the lower time frames for it to build a base, find some structure, and then this is where we can look to get our entries. It's a form of confirmation. Now, it doesn't always protect us from getting a slightly larger deviation and then price getting back within the range. But if that does happen, right, then we can play being back in the range with more conviction. Yeah. So let's say we have this, we get our breakout, price fails somewhere up here. Yeah, we get stopped out. Either that or we're in an entry, we get a break even, however you look at it. Even if you've taken a losing trade there, I think sometimes people are then really put off, price comes back within the range, and people are a little bit hesitant to then, play the range play as we've just discussed. Confirmation that you're inside, trade it to the midline, lose the midline, trade it to the lows. Yeah. And I think the reason people are hesitant for that sometimes is because of that loss aversion bias we have. Because we believed we were right here in going long. Turns out maybe there's a big deviation, price comes back within the range here. And what we really need to do, and obviously once we understand this on a level that we've tested it enough and we understand it, is that we just want to be going back to our range principles, right? What happened here? We deviated the range, we got back in, we went to the midline first, then we went to the range higher. Yeah. What happened here? We deviated the range higher, we came to the midline. Yeah. Why didn't we trade it down to the range low? Because we held the midline, right? And you can see here, even when you're looking at the candles, right? Look at the bodies respecting this line. Yeah, we got the deviation below, price came back within, and we can trade it up. And obviously we can look to take those trades on a lower time frame, where we see more structure. So if we break down to something like a 15-minute chart, and this is where it comes in with taking our high time frame bias, yeah, decanting that down onto a low time frame and finding ways that we can execute. So, for example, price has this violent reaction here. Yeah. Now, I spoke about this recently on a short video, and I think it was from our last live stream as well, which is price tells us a lot how it interacts with a level. Yeah. So you see price just dipped outside of here, and then immediately it gets shot down. If you want to know ways that you can trade that, because there's a big drop there, yeah, you can be monitoring this. You can then wait for a couple of different things. You can look for structure breaks. Yeah, you can take what I would consider is a higher risk but higher reward entry here, where you could take something like a Fibonacci, take that from the high to the low of the drop, yeah, and then you would be looking for an entry within the top 50% here, which is the premium part of the range, which is an ICT concept, certainly where I learned it as well. So we're looking to split these displacement legs into 50% ranges, premium and discount. Premium's the top 50%, which favors our short plays. Discount is the bottom 50%, which favors our long plays. You could take a move like that. You could place your entry here. You could place your stop above the swing high and target the midline. Or you could break it down into even lower timeframes and wait for a confirmation pattern. Or you could look in here and say, okay, well, what you want to see is a break of market structure, right? Ideally, when we see that, what's a really good precursor for that is if we have some kind of sweep. Yeah, so we see we have this high here, price has broken down, it's got back into a bullish structure on the lower time frames. We've taken liquidity here, and this is my favorite type of breakdown pattern. I'm then looking for the swing low, which is here. Yeah, that provides our shift in market structure. And then I want to see displacement. Yeah, so you hear me bang on about this word a lot. Again, something I learned on ICT's original mentorship a number of years ago, but is how price moves through a level. Yeah, you want to see it show that energy. And what you get here is this is the fair value gap. This is the displacement, right? If we go back to our theory of using displacement legs, we want to take it from the high of the move to the low here. And just to make that clearer for you guys, we can draw it out like that. And then what you're doing is price comes down into here. You want to target an inefficiency that's in the upper 50%. Yeah, this is premium. We want to be shorting from here. Here's our entry. When price retests the fair value gap, our stops go above the swing higher, which is here, always a couple of pips above. And then ultimately we're targeting the range low. Yeah, which would have worked out as a really, really nice trade. So you've got this initial move that's telling you that the market's reacting here with bearish sentiment. You then wait for the market to recover a little bit, yeah? Then wait for that breakdown, that market structure shift. And that's normally how I like to enter. I like to enter with a bit of confirmation, all right? So that's where we are at the moment. Let's pop ourselves back up to the higher time frame and say, okay, that's all well and good, BC, but that stuff's already happened. What's happening now? Well, this is where we need to be showing a little patience, okay? Because we've got this move here. Like we've said, if we're coming up into this, right, and we're starting to get these kind of moves. We come and set this high, higher low, pump up above here. Again, we just want to be finding a fair value gap down here, take that little dip into here, and then we can move higher. But what if we don't get that? What if price is starting to show a bit of weakness here? And in fairness, I think we've run a lot of levels. Price is looking a bit overextended. All you have to do is zoom out a little bit. Look at how up only this move has been back here since the 10th. Yeah, we've had this correction as we've come into here, but from the 10th to the 23rd, you basically you've almost had 2 weeks of price just going up. Yeah. So this consolidation is normal. When we look out, we've taken out all the liquidity above these highs, and in doing so, we've left these imbalances here. So I feel like price could easily correct a little bit lower. All right. But we just, we don't want to be thinking about these things. What we want are plans. So what am I looking for? I'm looking on the lower time frame. Yeah, let me drop this onto an hourly and show you what my current thoughts are. If price is looking for bullish continuation here, yeah, price has come down. One thing I'm not massively keen about with this is we failed to really run this liquidity. I thought we would purge below. Then when we recover this level, we can say, right, bullish momentum, let's trade it to the highs. So the reason I wasn't looking to really kind of go long this morning is because I expected us to run liquidity below these lows. We didn't, and we don't have to. That's just how I kind of see it and the confirmation that I want. But now I'm saying to myself, okay, well, this is a pretty big move up. Because what are we here on the hourly? We're in a downtrend, right? Lower highs, lower lows. What this move here has done is this has given us our market structure shift to the upside. So going back to the points, let me just delete these to clear it up. Going back to our point here, what do we want to see? So a couple of things. I've got this fair value gap marked up, this bearish fair value gap. Now you can learn, and again, I would always recommend if you want to learn ICT concepts that you go directly to ICT. If you want to learn about trader SC concepts, go directly to SC. For me, SC has probably been the biggest influence in my trading along with ICT as well. I'm not an ICT purist. I use those concepts and I have my own trading style, but anything that is a nod to them, I think is very important to always, I don't work with either of those guys. I have no affiliation with them, but do always go to the source of these learning materials if you can. So based on this is looking like a fair value gap inversion, right? Meaning that we've got a bearish fair value gap here that's now been run through with a bullish fair value gap. Yeah. So for me, what I'm looking for now is for this to hold as support. Now, if this holds as support here, it kind of ties in with our idea that we've got these bullish fair value gaps here as well. So let me just do this in red so that we don't get confused with this. All right. It's come out a lovely salmon-y type color. I like that. So market structure shift. Remember what we were saying, right? Let's find the origin of this move. Yeah. And let's just put our premium discount range on there. You see people draw this differently. I mess it up quite a lot. Having the premium is at the top, discounts at the bottom. Some people have this as green, this as red, this as red, this as green. Obviously depends which way you draw it when you have it set out like this on a fib. But basically just think of it like this. Yeah, and it probably makes more sense this way around. I think this is how ICT teaches it, is that you want to be long from discount. I mean, you want to see price reprice lower into an area that it's more attractive for people to go long. This area here is more for shorting, yeah, but it's obviously that needs to be tied in with a high time frame bias as well. So what we're looking at here is this is the displacement leg, meaning it's the price action leg that's broken market structure, yeah. So if I want to see bullish momentum here build, because we've had this big move up, right? This is a big pump. Now, pumps like this normally happen for one of two reasons. It's normally big players stepping into the market. So you get these big reactions because basically the orders down here, people are short, right? So people are going short, short, short here. Thanks very much. Where are they putting their stop losses? Well, people that were late to the game are having their stop losses here, stop losses here, stop losses here, right? What's this move done? This move has taken all of those stop losses, which turn into buy orders because they're short. So your stop loss becomes a market buy order. What big players can do then is take this big pool of liquidity, which are buy orders, and use it to fill their sell orders. Yeah. So this could be like almost a manipulation style pump to generate the exit liquidity to fill the big positions of people that want to go short, right? So we don't know that, right, until it plays out. And that's why we take these things onto lower time frames and then we look for the reaction there to give us an idea. So what we've got here is our displacement leg, price correcting into these fair value gaps here. We want to see it come down into our green box, which is our discount of the range, meaning that we favor longs. And then on the lower time frame, we would want to see price come down into this area. Then we just want to see it something like this, So that would be, ideally we'd have a sweep in here, but the key thing here is our shift in market structure, right? When we get that market structure shift here, we then take our premium discount range again. We find our fair value gap in here. Could be here, could be there, as long as it's down in discount. And then we would have our orders here, our stops under here. We would wait for price to retrace into this, again, down in discount. And then we would first target these highs, and ultimately we'd be targeting positions higher up. All right. So that's what I'm looking for at the moment. I'm just going to remove that for a second. Actually, I won't. I'll just change it to a slightly more unobtrusive range. So this is what we're looking for here. Price to draw down into here. So what else can we do if we don't see that? Well, if we don't see that, it's telling me that the bulls aren't stepping in here, right? So if we don't see that set up, let me just get rid of these quickly. Then I'd be looking for something more like this. For price to really cut through this, and then I would like to see it return here. Just put this in red. So to really cut through these fair value gaps, right? And then what we'd want to see, as we've seen with this one, we would then want to see these fair value gaps here. We'll focus on this one. We want to see this turned into resistance, right? So then when price comes back into here, bullish fair value gap should be supporting us, should be a springboard to launch price higher. If we carve through it with ease, like we did with this one, price comes through, we find this as resistance, we once again get ourselves to our lower time frame, find our breakdown pattern. We want to be very aware of this low, So we want to get a good risk to reward so that we can maybe start to de-risk here. But then ultimately, we would be targeting the mother bar low, via this liquidity down here. So once we know our liquidity targets, then we can sit and we can have a setup ready to go. Just a dad. How you doing, buddy? Drinking a nice brew as we speak, actually. Bought a nice 2,000 strong bag of Yorkshire tea. It actually genuinely looks like a sandbag. Glorious thing. So that's my thoughts on Bitcoin, guys. That's where I am at the moment. Because when we zoom out, if we just hide all this gump for a second. So when we zoom out, what we're really looking at here is the fact that we're in the middle of a range. It very, very rarely, if ever, pays dividends to take positions in the middle of ranges because, look, we've got the upper portion of the range here. Remembering our kind of premium and discount elements as well, So just overlaying premium and discount here. What's this telling us, right? Remember, if we want to be short if we favour shorts from here and longs from here, what do we want to see? Well, ideally, you want to see a level swept. See how we sweep these highs? Price breaks down, gives us a great opportunity to go short. We want to see price engaging with a high time frame level or order block or fair value gap. Then we can say when it interacts with that, if our strategy and our parameters are met. So for example, in here, we're in premium, meaning that we're favouring shorts. We don't have a sweep yet, but if we'd seen a level swept, like here, for example, right, like we got here, so see price came up into this order block, right? It's our 4-hour order block. sent price lower with a fair value gap after it, which gives it even more weight. Then when price interacted here, we got our sweep. Yeah, zoom in a bit so you guys can see that. Swept the level, broke down, retested, sold off to our midline target. All right. Even though we had expectations for it to come and take this liquidity, it still may do that. Right. So what happened here? Same situation, right? We had our sweep, price came down, had our sweep, price broke up. We're looking for higher prices, looking for it, first of all, to travel to this liquidity here and then a little bit further up as well. This is brilliant. It's totally off topic. I love to cook, right? So I'm a massive fan. And QBS, a good friend of mine who I work with, you'll know him for his graphics as well, but he's actually a sick little trader too. He keeps telling me to post pictures of my food. So I've started doing it just for a bit of fun, really. So yesterday I made a ox cheek stew, like a casserole, which was ridiculous. Reach out to me on Twitter, and what I'll do is I'll start writing these recipes down because I get them from a standard recipe and then I adapt them over time. I can make Guinness and stout chilies and loads of bits and pieces. But this just made me laugh. So just the dad said, just so you know, yesterday's cooking of yours made my wife send me to a bizarre veggies to try out a new recipe. Turned out awesome, but I just wanted to go fishing. So thanks a lot. I'm so sorry, mate. That is a brilliant, brilliant story. I'll maybe just block me at weekends in future. So another really good point here, McRaw. Yeah, it was, mate. It was adapted from a Jamie Oliver recipe. Really rich, really unctuous, a little bit sweet. Made like a horseradish and mustard mash to go with it, and then some tender stem broccoli. It was it's on my Twitter for anyone that's interested, along with a little video of just how the ox cheek just fell apart. 5 hours slow cooking. God, it's making me hungry now as well. Yes, H, how are you doing, buddy? Great to see you. Great to see you. A really old friend of mine, the Nests. Great to see you on here. And yeah, absolutely. Maybe a recipe Saturday. That's a great idea. Lisa, good question here. Does it give you a bias when they don't sweep a level? So, yeah, it's a really good question, actually. So how I would look at that is if we're looking at it in terms of liquidity, the way I like to see, or the way that I see price, is that it's constantly searching for liquidity, right? And that makes sense to me because the market makers want to move markets, right? They want they need markets to be efficient. They want it to be a good trading place. You've got to, for every bid, you've got to have an ask. You've got to have buyers and sellers, and the best marketplaces make that harmonious balance really, really well. You've also got major players to consider in this space as well. So for me, I think of things really, really, really simply because I'm a really, really simple creature, right? So let's just quickly look at this. If I've got liquidity here, liquidity here. Now, this depends on what your beliefs are as well. I know some people don't believe in traditional support resistance. I've always seen it as support and resistance is made because, let's say up here, you've got people feel that a product, an asset, whatever, a currency is overpriced. Yeah, then that kind of layer of resistance there is made up because people don't see value in it above that, right? So people are selling it quite aggressively here. Get a good solid red colour on that. There we go. Then, when we're under here, this acts as support because you've got a lot of buyers down here, right? People are saying this is value, yeah? Now, this is also what gives us our ranges, right? We see price like ping pong between the two levels until we get confirmation, yeah, that all of a sudden people have now accepted this area as a good buy zone, right? In which case, that's why we look for this area to get tested, and then we expect this to turn into support. So the simple rules of supply and demand, all right? Now, the important thing about this for me is looking at how price engages with these different levels, okay? So if I'm a big player and I want to get my positions filled down here, I know there's buyers, right? So I know that this is an area of support, but I've got a lot of money to bring to the table here. And the problem that I've got is if I'm buying when everyone else is buying, my orders are going to get slippage and a lot of it, all right? just going to keep going up. Yeah, exactly, C-Rock, ping pong, right? So I'm going to get my orders, but then all of a sudden, if I've got to have my stops under here or say under here, yeah, then all of a sudden my risk to reward, if I manage to get all of my orders filled here, yeah, and I can manage to do it in a way that I can exit everything here, then let's just say we've done that and we've got, and let's not cherry pick, let's do it to this line, 7.4%, yeah? Well, all of a sudden, if I end up getting my average fill here, yeah, at 5.23%, and I'm unable to offload everything here, so I get more slippage coming down, so my average exit is all of a sudden here somewhere. We've just taken that 7.5% and we've basically cut it in half. Yeah. Jason, hey buddy, how you doing? Can you cover laddering question from the weekend, please? Yeah, sure. Can you remind me exactly what one it was? Because we did cover the ideas of kind of laddering into positions. I can take another look at that for you quickly towards the end. But if it was something specific, bud, if you can just give me a reminder, then we'll definitely cover that. No problem. So this is the idea that they don't want this slippage. Yeah. So how do you avoid that? How do we avoid this slippage? Well, what you want to do is you need a lot of orders here. So you need a lot of people on the other side of your bet. Big money is saying, right, I want to go long here, right? Retail and other people, and I include myself in retail. When I'm talking about big money, I'm talking about huge hedge funds, commercial banks, everything like that, right? Now, the best thing to do is convince everyone that the market's going down, yeah? Because what happens is you've got people that were long here. Let me just tidy some of this up very quickly. Perfect. Right, so people that were long here have got their stop losses under here. What do those stop losses become? Yeah, when you're in a buy order, they become sell orders, right? Because you're long from here, your stop loss gets hit, you immediately sell back to the market. Yeah, so you've got sell orders here. Now, you might be thinking to yourself, well, why the hell, if people, big money wants to go long here, why do they want to create a load of sell orders? They need those sell orders, yeah, so that they can overlay their buy orders. Yeah. Thank you very much. We'll take all of your sell orders. They don't get any slippage, or they get very little slippage, because they imagine they convert all of those straight into buy orders. The market flies up. Then what else does it do? It takes out all the liquidity that's been resting. Where's my pen gone? Here it is. The people that then went short here and the people that went short late have all these liquidity here that then allows it to pump up. So looking at that as an explanation, when we're looking at levels, and to kind of get back to the point that this was originally about, is if we don't run a level, yeah? So say, for example, we were here, or actually let's use an example of this one. Say price is on its way down. Price kind of gets to here, yeah, and it hasn't run that level, then you either want to see extra confirmation that it's stepped back inside a range or has reclaimed a specific level, or maybe you've got a slightly higher time frame target that it didn't quite tap into yet in the form of an order block. But typically, if we were here, I would actually be looking for price to still attack this level. If I'm proven wrong, price steps back into the range, we start building bullish structure, then I'll trade it back up. But in terms of giving us a bias, which was a very good question that was asked from Lisa, then if I'm coming into this level down here, and like I said, we've stepped into the range, we've kind of been ping-ponging around a little bit, come down to here, we've taken liquidity from the highs, and we've just kind of got to here, and then we've started to correct a little bit higher. Well, when we're here, a lot of people are saying, well, are you going long? Are you going short? What I'm doing is I'm monitoring here, because if I see a breakdown pattern, then I know I've got a form of ready-made liquidity over here. So the chances are that price is going to go deeper. What do I do to avoid that? Well, I can always say to myself, well, if price is set this high, if we come down here and we start finding some kind of support, we get back into this bullish structure, yeah, then over here gives me a lot more conviction to then go long, okay? But while we have these naked levels, yeah, or these lures on price, then I'm still under the expectation that price will try and exit around these, below them. But if it doesn't, yeah, It could be that we've come into a bullish order block here, right? So that's why we want to sit in and we want to monitor our time frames as we go down. So let me just deal with a couple of things. So just got a couple of questions. I want to go. Jason's just asked about the compounding that we covered last week. So let me just have a quick touch upon that, and then we'll dive into a couple more questions that we've got on here as well. So when you're laddering into a new position with 50% additional to the original position, do you open the new positions trade or actually ladder into the same trade? If you're laddering in on the same trade, then your position entry price will start rising, which brings your stop loss much closer for the entire trade and also creates a larger drawdown. It is a brilliant question, Jason. No, for me, I'm opening the positions as individual positions on top. If, however, I'm in an original position, let's just drop to a lower time frame so we can look at it on one of these pumps, then I'm always moving my stop loss up, yeah, respecting the most recent trade. So, and we'll just do a short example here, yeah. So let's say we've gone, our original position was we're expecting price to draw back into this fair value gap. We've gone short here with our stops above here, yeah. And we're saying to ourselves, you know what? This liquidity below this low, yeah, this is where we're going to exit. So once we get down to this point, stop loss is taken to entry, so the trade is risk-free. Now, the next thing that I'm looking for here is I'm saying, well, we've still got the lure, or the target is still this dotted line down here, yeah? So if price fails to recover here, and remember, like I've always said with our entry techniques, if we fail to recover, we get the sweep, we get that shift in market structure, take our premium discount range. I know that's a bit upside down here. We've got our fair value gap here that's in premium, yeah, the green box of our range. So it means that this is the area that we're looking to short from the top 50%. We get our trigger in here. Yeah, so we're on here. Stops go above here. My new target, right, now becomes this dotted line, which is our next target. What we're saying is on this one here, we've moved our stops to entry, yeah? So we're now at, that's completely risk-free, and we've obviously taken some profit as well. Now, if we're looking to compound this trade, the way that I do it is I'm opening a new position here, and this is my stop loss. This position's running risk-free, but this position's running with the stop. Now, let's say, for example, once we take this position out of play, yeah, then I'm moving my stop loss to entry here. So we're risk-free. If we had continuation below this level, yeah, so you see, you'll notice no sweep, no sweep, no sweep. Then what we do get is we get our reversal here where we get the sweep here, the shifting structure with displacement, tiny little fair value gap here. Price comes up, retraces, moves higher, yeah? Then at that point, we either scale out of the trade when we break that structure, or price comes up and triggers our stop loss, which is entry. If you were compounding, like you rightly said, and you're just adding to the original trade here, you just got to be very, very careful. You want to be making sure that obviously when you're moving your stops up, the point that Jason's trying to make here is that you're affecting your risk, right? So it's basically affecting where your entry price is, because your average entry price is coming down to here rather than up there. So that's the way that I look at it. A lot of people will scale in very differently to these type of positions. Obviously, some exchanges as well, when you're adding these kind of positions in, are doing that automatically for you. So for compounding on Bybit account, we will have to then trade on sub accounts for different accounts. Correct. Yeah. How do you manage 3 to 5 positions opens on different accounts then? I don't. I typically very, very rarely open more than 2 to 3 accounts. You can do it at 2 to 3 compounding positions during a trade. If you're using it in individual trades, you can switch. For example, I will use it between Bybit and then Apex, so which is the decentralized exchange through Bybit. And that allows me to kind of position myself there. But if you are obviously doing it on Bybit, and what Jason means by this is a lot of exchanges, once you open a position on a single asset, you're not opening then a new position on top of that asset. You're either adding or taking away to that position. All right. So if that's the case, though, that's still absolutely fine, because you're coming down to here, right? And your original entry price was here. The original stop loss was up here. However, then when you take your new entry down here, that's your new entry price. So it will take your entry price down to something like this. But you obviously then need to be very aware of where your stop loss is. In this case, obviously, we've got a pretty wide one because as it moves down, it's going to have a big effect on your entry position, your average entry position. However, as long as you're managing your risk, yeah, and then you take profit on the way down, moving your stops down with the trade as it goes, it's very, very manageable. What I'll try and do, mate, is I'll try and dig out a good video or see if one of the team have got some really good input on that because I know that's something that a lot of people face, and it's one of those things that's quite tricky actually without doing it on an account and showing people. But it's a very, very good question. But you can use different exchanges and you can hold different positions, or you can obviously use one exchange, but do be aware that it's going to affect your average entry and that you do still need to be moving your stops down with your risk. What you would hate to do is obviously leave your stops around the original trade. Things come down to here, you get a quick reversal, it takes you out of the position, and then obviously you leave most of your profit on the side. Awesome. Let's have a look what we got. You're very welcome, Jason. Apex is looking very interesting as potential high volume decks for perp, staking and all. Tempted to grab a bag indeed. Yeah, guys, do. I think there's something in the description. We partnered with Apex a little while ago because we've been looking for a decentralized partner to go with. There's a nice synergy with Bybit. Fantastic exchange. The user experience is one of the key things for me. That's where decentralized exchanges have been lacking. That and liquidity. Apex has sick liquidity. And I really personally like the user experience as well. It doesn't really feel too much different to me than trading on a centralized exchange, which I've been doing for a long time, right? So the longer you do it, the more you get a little bit ingrained in your old ways as such. So do go and check them out. I think if you use our ref link, I think you get 5% off fees for life, I think. So yeah, go and check them out. Just get a little trial account. You hook them directly up to your cold store, right, up to your wallet, to your ledger, right? So brilliant. All your funds can't get caught up in the sort of centralized situation that, as we've seen, obviously with FTX, etc. But at the same time, they're still making inroads. I still really, really like using Bybit and the centralized exchange front, but it does give me the flexibility, obviously, to use two different accounts in terms of positioning myself like that. Hannah, BC, do you scalp on the 1 minute? If so, what levels do you use for that? Yeah, so really quickly, H, if we're going to look at if we want to look at scalping or you want to look at trading on anything, like you allude to there, the key thing is getting your time frames aligned. Yeah. So something I've been doing recently, which I kind of wanted to share with you guys, which I found really interesting, is using B Pro for the trailers. So I've been messing about with this for a while, right? Now, I've got this set up here. Where were we? I think I took some. So I've just been doing some like updates with people on ETH, been running kind of like a big test on this. So for this one, for example, let me just wait for it to load for a second. The thick black line and the thick grey lines represent the hourly trailer, yeah, which is basically, telling us what our trend is, yeah. And then the smaller, the thinner lines here, yeah, these represent our current time frame. So our current time frame in this case is the 5 minute chart. And I found this to be quite a good combination, actually. So we can see, for example, here we go bearish, right? So from this moment on, we're only looking for bearish trades, right? So what do we want to see? We want to see price pull back, take out a high as we get here, break down, and within here, we can then take our entries, all right? So this is the idea of using your higher time frame and then using a lower time frame to get those confirmations. Now, what we want to do is be very careful around those time frames. So if I'm looking at, say, a 1 minute chart, I think I'd be looking at really kind of like the hourly more so in terms of what I would call the kind of premium discount ranges. So if we take a look here, where we are here on ETH, we can see a good example here of ETH actually with this mother bar low, how we kind of deviated the mother bar low, closed back inside. Now we've had this bullish run, yeah, where to? Directly to our midline, and now price is starting to correct lower. So with that information in mind, all of a sudden the 5 minutes has become like our execution time frame, and then we're using our higher time frame levels for our engagement. So if I was looking on a 1 minute chart, I would very much be looking at that to refine an entry that I was probably hunting for on the hourly, refining that down to say like a 5 minute to look for my displacement. So giving this as an example, this sets our range. Yeah. So this is our leg, or in fact, let's just hide all of this for a second. So again, for me, this comes back to liquidity, and I'll give you, if I'm really looking to trade the low time frames, I'll show you exactly how I do this. So, and let's just deal with complete recent data. All right. Now I'm looking for the price leg that's currently containing price. So what do I mean by that? I'm looking for a sweep. Yeah. Then I'm looking for price to go up. Then I'm waiting for that break of structure, which in this case happens here. Right. And then off the back of that, I'm then drawing a range. Okay. High to low. Now, once that then happens again, as we see happens here, we get our sweep, liquidity gets taken. All right. We come here at this point. This is when we break structure to the downside. We've also taken liquidity above these equal highs. So I'm then saying, okay, well, this leg here is what's containing price. Yeah. Let me just get rid of these quickly so it's nice and clean. Now, while we're in here, this acts as our range. Okay. So as we would do when we're looking at premium and discount, we only want to be long from the bottom portion of the range. Yeah. And we want to be short from the top half. All right. Oh, 1 second, just guzzle some tea. So if I'm now moving down onto the lower time frame, and let me just lock this in here, and also make sure that we're not cherry picking this because we didn't break structure until here. So this range would only be live from this candle on, from this green line. Why? Because this is where we shifted structure, or actually broke it. Low, lower, high, lower, low. Yeah. So we're then hunting. While we're in the red, we just hunt for shorts. While we're in the green, we just hunt for longs. So I'm then moving to a 5 minute. And also, someone really apologies, so I skipped past this, but it just reminded me. I think it might have been you, C Rock, about the kill zones, which I'll cover in a second as well. Excuse me for just a moment. I'm just going to blow my nose. Oh, thank you for that. Still seeing off this chest infection. So we can see that we're here. And funny enough, actually, I think these were some notes from the previous one. Yeah. So talking about displacement here. But let's look at this, right? So what do we say? From our green line on, we're only looking for short setups, right? And I'll tell you how else we can refine that, which we'll cover as well, and deal with C-Rock's question as well, which is about our kill zones. And I focus quite heavily on the New York sessions. So this kill zone here made by this gentleman called Dr. Fuse, really good guy. You can go and check his stuff out. No affiliation with him, but he makes these awesome indicators. So this is how we can tie this stuff in, right? Aligning it with kill zones, or first of all, let's do it without kill zones, right? We're in our red area. What do we want to see? We want to see price pushing higher to take liquidity, yeah? And this is what's important for me. I need to see a sweep, and I want to see a level engaged with, right? So this big sell-off that we had here, we have this order block building up, yeah? Order block, big inefficiency below, price sells off. So when price comes into this area, maybe we're engaging with this order block, yeah? So I'll just take the top candles, and I favour the bodies of the candles, although do your own research on that, guys, please. So we're coming up into this level. Why? Because look, we had this price tried to make a recovery here, big sell-off, comes back down. We've had that initial engagement with it here, yeah? So we're looking for our sweep, local sweep, meaning that we want to see liquidity taken. What have we got here? Equal highs, price comes up, sweeps those equal highs. Then what do we look for? We look for our shift in market structure or a break in market structure. In this case, it's a break because we've got a lower high before it. Price comes up, breaks market structure here. Now remember, and I know I sound like a broken record, but I like to take the displacement leg, which is the leg that comes back down. How do I know it's that leg? Well, I don't. What I do is I draw it in when we get our first, in this case, up close candle. If price then continues lower without revisiting that, then you just keep moving it down, or I keep moving it down. Anyway, that's certainly how I do it. And then all I'm looking for in here is my fair value gap. Now, the fair value gap that I've got is here, right? But I can't use all of that because only this part sits in premium, right? So I adjust it so it's within the top half of the range. So that's the entry. Yeah. Stops just above there. And then you're targeting liquidity lower down. Now, that's obviously entering on a 5 minute. And you'll all be thinking, well, hang on a minute. Going off on a tangent again, but H asked you about the 1 minute. So, in terms of the 1 minute, what I'm looking to do with this entry is I'm looking to refine it down by moving to a lower time frame. Yeah. Now in here, what we'll notice is, and let me just move this across just a little bit. So that was our 5 minute trade. Nice 3.15R on that trade, right? But what we can do is we can take our 5 minute level, yeah, and then we can wait. We've got our high, low, higher, high, higher, low, higher, high, higher, low, higher, high. This here is where liquidity has been swept. Yeah, from here. Then what are we looking for? We're looking for a displacement leg down, right? So price comes up. Now, on the 1 minute time frame like this, I like to see really clear lows and highs, yeah? So when we see this low here, we get our structure break. So what am I looking for? I'm looking for the displacement leg, yeah? I'm looking for the leg that took out the market structure, that broke market structure. I take that from there down to here. I need a fair value gap, yeah, that sat within premium, so within the top 50% of this range. Again, there's different entry techniques and that you can take as well, guys. You can use breakers. For me, I like focusing on this. I think it's a good place to start. So then all of a sudden, we're now short from here. You could be, maybe it's a bit cocky, but you could have your stops above this high here, or you could ultimately be a bit safer and put it above the ultimate swing high here. So let's do that. We'll put it on worst case scenario, right? This swing high over here. Well, our target's still the same, right? And don't get me wrong, we'll obviously be taking targets on the way down as well. But here we were aiming for this swing low, or no, we weren't. So where would we have been aiming for on here? It's because we hid the dotted level, yeah? But, let's just say, for example, we're aiming for the volume bottoms of the candles here. So that was a 2.97 risk to reward on our 5 minute entry. We got our 1 minute entry a bit later, yeah? But by refining it down onto a 1 minute, that risk to reward has become an 8.3 over a 2.9, all right? So that's how I'd be looking to use the 1 minute, yeah? Because if you don't have that higher time frame context, then unfortunately the 1 minute just means that you can just get really, really chopped up quite a lot, yeah? So I'm still looking for the 5 minute, give me that displacement, yeah? So let's just turn this off for a second. So as we can see here, we're still looking for the 5 minute to give us that displacement, to give us that nod that price is ready to go lower. Now, to cover the last point, which I'm going to cover today, which was from C-Rock saying, okay, well, how can we bring that in? And let me just delete these for a second. How do we then overlay that with premium and discount, with our kill zone? Sorry. So for me, someone that trades the New York kill zone a lot, which is 2:30 in the afternoon UK time, 1:30 UTC. Yeah. AM to PM session is where I favor the trades. Why? Because it's typically the highest volume. And then what we're looking for here, are we doing anything different? Should we be doing anything different? I'm not sure, right? For me, I like to keep it simple. I like to say to myself, I'm not sure if this is how price moves, if this is how it moves and price is fractal, then I want to be looking for the same things, right? So all I'm looking for in here, back on the 5 minute, yeah, coming into the AM session, what am I looking for? I'm saying, okay, have we had the sweep heading into this? Yeah. Have we had any liquidity taken? Have we taken out these highs? Have we taken out these highs? Right? Then, when we get that, we then look for our displacement lower. These moves have to be within inside our kill zone. Yeah. So our kill zone here is what restricts the move. And maybe, when you test something like this out, maybe you say to yourself, do you know what, actually, let me just delete these bits on the lower time frame so we can make this clearer. You might be saying to yourself, do you know what, I don't need a sweep. I just need to see price come into a key level. We've come into this order block. Are we holding below this order block? I would say at this point, what I like about this is it's got a lot of validity, right? Rejection, 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 yeah? Displacement. Price comes back up and then breaks down. Now, we need to be taking this within our kill zone. So I hope you guys can see this. That's where this yellow bar starts down here, yeah? So what can we do here? Well, very simply, if we're convinced that we've got our bearish narrative here, we want to see a key low taken out. Again, giving us our market structure break. Where's the displacement leg? So we've got this up candle here. So this high down to here is where price was taken out. And again, look, see when we got this first up close candle here? Yeah, this is then when I would take the first part of the premium discount range. Yeah, but see, we don't come back above it. We then break down further. So we adjust this, okay, till we're down here. Then when we get to the bottom here, which you'll notice is this candle, so we've still not come up into this. This is our fair value gap here, right? So price has come into our point of interest here. We've seen the market structure break. We're within our kill zone, New York kill zone, sorry. So we're setting up a short position here. Stops just above the prior swing high. And my first target in this instance would actually be this low. And I want to make sure I've got at least 1.5R at that point, because I look to take a little profit and then I look to move my stops to entry to make the trade risk-free, right? And then ultimately I would be targeting lower down here for targets. What I'd be looking at here is when we have this big reaction here, I'm safe because I've got my stops at entry, right? Then as price breaks down again, if we're failing to attack this high, what you can do is start monitoring the up close candles. Yeah. Which we can use here. So what we want to see from the up close candles is these order blocks defend price. Yeah. So you notice this order block here. What happens? We do it in our order block blue. Order block set, price drives away, retests it as resistance, sells off again. Yeah. Then when we have these order blocks here, our expectation is that price is going to defend here. It doesn't. What happens? It comes up, retests it as support, and ultimately goes higher. That means at that point, you can look to just start scaling out of your positions. Yeah, and you don't make as much money as if you reach for the lower targets, but you still make decent money, and you also have the benefit here as well. Oops, sorry, it's tweaked out on me a bit there. And you also have the benefit of being a bit more risk averse. Always, for me, better to book profit. Sorry, guys, I don't know if you lost me there for a second. I think we've had a little bit of a power cut here. Everything's just starting to flash on and off a bit, which actually isn't the worst. At least it waited until the end of the stream for us. So, look, guys, I hope everyone is there. I'm going to be back on Wednesday for alt requests. If you want any of this kind of information built out some more into that session, come and reach out to me on Twitter. Come and reach out to me at the Nest. We've got free memberships for the Nest. You can sign up for a free trial for the Nest. And at the moment as well, if you trade with our partner Bybit, you can sign up for a special calls-only Bybit deal, meaning that basically just by subscribing to Bybit and putting in a very small deposit, I think it's $100 or something, then you get access to all of the professional trading team calls. So if that's of interest, what I would say is never ever be reliant on another company or anybody else for their calls, yeah? By all means, we offer it as a service because it helps our members make money, yeah? But make money using those, and obviously always employ good risk management, but utilize it so that you can earn a little bit of money whilst you learn. Everybody here has the opportunity to secure their financial freedom. That's not some bullshit, forgive my French. It's very, very true. I did it. My brothers and sisters at the Nest have done it as well. None of us come from finance backgrounds. Just a lot of very hard work, a lot of commitment, and a lot of time dedicated to education. So by all means, use that to get it. Use that to make a bit of money, but make sure you're pushing yourself every week to study and make a good study plan, get part of a good community. And if that happens to be us and you're interested in what we do, you can find us links down in the description, or you can always reach out to me on Twitter. So huge thank you to everyone. Thanks for all your well wishes as well. I'm really hoping to be shot of this bloody thing in the next few days, because it's turned into some kind of high pressure head cold at the moment, as you can all probably hear. But I'm going to be back with you on Wednesday, come rain or shine, and we're going to smash through some alts. So if you've got anything on your horizon you want to take a look at, please do let me know. Thanks everyone for the feedback and for joining on the stream. I appreciate all of you so much. Have a fantastic week. Yeah, do come and find me on Twitter, or come and grab me at the Nest if you've got any questions. Let's have a great week together, and I look forward to seeing you all around the Nest. Take care, guys.